Making sales, but your bank account still feels empty? You might be missing a crucial piece of your financial puzzle. We're talking cash flow analysis. In this video, we're going to break down exactly what cash flow analysis is, and I'm going to give you a clear idea of how you can start using it to gain control over your business's overall financial health. So what exactly is cash flow analysis? There's a definition, right? So that's the regular review of your cash flow statement and the forecast if it's available. Why is this important? What's the purpose? Number one, you want to understand how your cash moves in and out, not just what's in the bank and not just what your profit and loss says. You want to identify opportunities where you might be able to hold on to more cash. And you want to address issues like if in 2 months you're not going to be able to make payroll because of cash shortfalls, you want to know now so you can address it and deal with it before it's a problem. The last part is you're going to compare actuals to your forecast. And why? Because when you actually look, this is what I have in my bank and this is what I thought I had, it gives you information about your assumptions that helps you make decisions. What do you need to do this analysis? How do you make sure that you understand your cash position? Okay, so the first thing, you need that cash flow statement, right? Both what your cash flow is, what it's actually doing, and your cash flow forecast, what's going to happen in the future. You need both of those. And preferably, you're going to compare them. So you'll put together a forecast based on your sales and all your cash flow assumptions, right? How fast are people going to pay you? How fast are you going to pay your vendors? Do you have to buy inventory? All of these assumptions will go into that forecast. Then you'll actually start running your business, and not only will you have a forecast, you'll have a statement that is actual results. By comparing those two, you know, am I doing better than expected? Am I doing worse? Am I running out of cash? That's not what I thought was going to happen. And you'll be able to make decisions and immediately affect the health of your business and stay with those doors open, successful, profitable, and cash flow positive. What other helpful tools might you use? I would suggest that you use some financial dashboards and really track key performance indicators, sales, expenses, cost of goods, cash flow, and not just flow, but actual cash balances every month in the bank. And you might, beyond some financial dashboards, use some spreadsheets or some templates or tools like LivePlan that can actually help automate this. But you absolutely have to use something, look at those KPIs, and track your cash position alongside that profit and loss. I'm going to show you how you're going to use LivePlan. You don't have to use LivePlan. You can use a spreadsheet, you can use another tool, but this is a nice, easy way to understand what is my cash position and is it what I expected. So we go to LivePlan and we can see that we've got a forecast, and this forecast has a profit and loss, a balance sheet, and a cash flow. These are all forecast statements. These are not actuals, but with LivePlan, we've actually brought some actuals in and we can compare them, which is really cool. So the first thing we're going to do is we're going to look at our cash flow assumptions, and you can see those here. So I've got accounts receivable, how many sales on credit, days to get paid, accounts payable, and inventory. And you can actually see that right now I have a cash depletion point if I don't change some things. And I can look at my cash flow assumptions and I can say, oh, I think maybe I can change some things. Let's see what I need to change here and what that puts me. You know, right now I have it set to no sales on credit, so I have no accounts receivable. Everybody pays me in cash, but maybe that's not the case. Maybe half of my sales are actually people don't pay me right away. I invoice them and they pay me. And then purchases on credit, let's say that all of my purchases are on credit and I've negotiated a great situation and it's 45 days to actually, pay my vendors. So now I've got these assumptions here and I can see what my projected cash is fiscal year 2025, fiscal year 2026, fiscal year 2027. So I can see all of that. And then if I am needing cash, which this scenario shows that I'm needing cash, I can look, and in some financing, I can add a loan and I can address the financing that I need. And then I can go back and I can look at that forecasted cash flow and see where I'm at. So I've changed my assumptions. And now I've realized, wow, by changing my assumptions, I actually do need some cash. And I'm gonna try to get a loan. And I'm gonna say that I'm gonna get a $150,000 loan for my business. And for right now, I'm just gonna put a standard 60 months, 5 years to make those payments. And I'm gonna put 5% interest rate. So I'm gonna create that, and I'm gonna, I gotta choose when I'm gonna receive this. So I'm gonna receive this in May, because it is May, and then I'm going to create it. And now you can see I have fixed my cash situation. So I'm not gonna run out of cash right now until November of 2026, which is plenty of time. I don't have to think about it right now. We're in 2025. I can breathe easy because I've used these tools and I've understood what's actually happening with the business. And that's the important thing. You can't have it all in your head, because the way people pay you, the way you pay them, if you want to throw inventory into the mix or you're going to make an asset purchase, it's too much to do all those calculations just in your head, and your business is going to get away from you. So using a tool, whatever tool you choose, but something that clearly shows you what's happening and where your cash situation is what's gonna make the difference between success and failure. Now you've done some analysis, you've changed your assumptions, you have a forecast, you're getting a really good sense of how your business is, both from a profitability point of view and a cash point of view. So now it's time to actually take some of that information and see if you can make some changes to improve your cash even more. So what can we do? How do we improve that? Let's go back into the cash flow assumptions and take a look at that. What if I could get more customers to pay me immediately, right? Rather than that setting that I put where 50% of my customers are going to get invoiced and it's going to take them 30 days to pay me. What if I could incentivize them to pay me sooner? And maybe instead of 50%, maybe only 20% of my customers get invoiced, and it takes me maybe 15 days to get paid. And all of a sudden, you're actually gonna see some changes, and you're gonna see that I have a lot of cash and I don't need as much of a loan. So I'm gonna go into my financing now and I'm gonna change my loan. And instead of $150,000, I'm gonna get $100,000. So now I've saved myself interest on $50,000 just by understanding and then playing around with those assumptions. And the last step to this is going to be, can you really implement it? And that's, once you're done doing all the analysis, now it's time to actually get it done and do it. But you can't do that if you don't have the information. So now we've changed that loan. I have a $100,000 loan and I'm totally fine. I don't need more. In fact, in this scenario, it is possible that I could even potentially go back in here and model $75,000. So I have saved myself so much money on that interest that I won't have to pay. And that's smart management for sustainable growth. What's another really good outcome for doing this cash flow analysis and managing your cash with data? You are actually in a position to walk into a bank and get a loan with all the information they're going to ask for. You're going to have to show why you need the money, what you're doing with the money, and how you're managing the money. And if you've put this all out in a forecast, if you can show profitability that makes sense, that is in line with how your company has been operating, you'll have all the data and all the reports and all the statements that bank manager needs before they make that loan to you. Cash flow analysis isn't just another item on your financial to-do list. It's truly your window into the actual, real financial pulse of your business. Don't be intimidated by it. Start by regularly looking at your cash inflows and outflows, and you'll be on your way to building a much stronger, more resilient business. Like the video and subscribe for more small business advice. Comment with questions, and we are here to answer them.